Welcome back, guys, to another episode of Pulse on the Market, the show designed to help you as an investor make more informed and just better financial decisions. Or if you just want a brief overview on how the market is doing, you're in the right spot as well. So to get right into it, what a day. The Dow is down 0.2% at 38,429. The NASDAQ is up 0.9% at 17,500. The S&P is up 0.38% at $4,924. And the Russell 2000 is down 1.2%. This is the small cap stocks at 1950. But man, have we had a few stocks just carry the entire market for today. First off, we have, just to give you a little brief overview of what happened in the pre-market. So Meta, also known as Facebook, reported a fourth quarter profit surge, 200% year over year to $14 billion. So that's insane. That's huge growth. And it also, even bigger, it announced its first ever dividend of $0.550 a share. And so that's huge news. That's the first dividend ever. And we saw it in the strike price, or in the share price this morning. They were up 16%, up over $60 to $4.58. Amazon also had a surge, the 14% year over year, but they still surpassed expectations, and their profits reached $10.6 billion. And they also announced the launch of a new AI shopping assistant called Rufus. I like that name. And their shares were also up 8% after hours, which is pretty good for Amazon as well. And a little news on Apple. Apple, their shares actually dropped over 4% in the pre-market, which is unfortunate for Apple. They officially launched its Vision Pro headset, which is priced at $3,500, and it hit stores today, actually. And I've been seeing pretty cool videos of the Apple Vision Pro. I saw a guy playing piano where you could literally see the notes just falling. Like he had the Apple Vision Pro headset on, and he could see the notes, just like those YouTube videos with the notes falling, and he could see it on the piano. So really anyone can play the piano now with this Apple Vision Pro headset. You just got to pay $3,500, small little premium there. But yeah, they might have surpassed expectations, Apple, but the stock still fell. It fell over 4%. And this is mainly due to a decline in China. So a 13% sales decline in China was revealed, and management is indicating a weakness in upcoming iPhone sales. So the guidance is not there, which is why the shares are dropping, even though they beat expectations. Decker was up over 60 in the pre-market, up 8%, which is impressive. And we'll get to them now, but it's far more than 60 right now. And Tesla is recalling over 2 million vehicles in the U.S. due to issues with warning lights. Its largest recall to date. And source on that is the Wall Street Journal. And that is a lot of vehicles. That's a lot of money. So Tesla, another hit on Tesla. That's unfortunate. They just can't catch a break. They got bad news after bad news. So that's how the pre-market is doing. And right after this little break, we'll get into the second half of the show and explain how the market's doing and dive a little more into Bitcoin and just certain news stories. So we'll be right back. Welcome back to the second half of Pulse on the Market. To get right into it, so after the earnings reports, the companies I listed in the first half, like Deckers, Meta, and Amazon, they're just having phenomenal days. So Deckers is up over $100 per share. They're up 13% right now at $875 a share, compared to its previous $872 at the close, which that's insane. So So that was definitely a good investment in Deckers. I mean, they surpassed their earnings expectations by almost $5, so it's no wonder it's going up. And I honestly like it a lot. Everyone's wearing the Hokas. Everyone's claiming that it's like a cloud on your feet, and also the Uggs, as I explained before in the last episode, that that I see so many girls on the university campus wearing Uggs, almost all of them, and so I'm a big fan of Deckers, and Meta is also up over $70 at $78. So they're currently at trading at $473.5 per share. They're up 20%. That is quite the increase. And so Mark Zuckerberg knows what he's doing, and that stock is doing quite exceptionally. A little story, little comeback story. Everyone loves a little comeback story. Carvana. So last year, I believe it was June or mid June, May, give or take. They were trading at around $5 a share, under $5, and they were super close to bankruptcy, but they rebounded. So they shifted to a cost cutting strategic strategy, and now look at the stock. In 2024, it was trading over $55 a share. Right now, I think it's in the 40s, but what a recovery. In under a year, they went from 5 to 55. So that wouldn't have been a bad investment if you were in that, if you took that risk when they're under 5, threatening bankruptcy. But now look at them. Shout out to their management for recovering that one. That must have been a very stressful scenario. But here they are now. And also Lululemon's footwear plans. So they're set to debut their first men's footwear line. That's big news for all you guys out there. And they're going to come out with a casual sneaker named Cityverse. And their their revenue goals are 12.5 billion by 2026. That's billions with a B. That's a lot of money. And so that's pretty big news coming from Lulu. Let's see how they're trading today. So they're down 0.6% at 458, but hey, they're coming out with shoes for guys, so that would be cool. I might have to invest in a pair of those. And the last two things for today is Bitcoin, which is hovering around 43,000, similar to yesterday. It's just kind of hovering in that range right now. We haven't seen a breakout in quite some time, but stay tuned because Bitcoin or cryptocurrency in general is very volatile, and it could go up really fast or down really fast. But I don't see it. Just from a personal opinion, I don't see it dropping below what it did last time. I would be very surprised if it did. I can only see up from here, but hey, that's just an opinion. I don't really know, especially with crypto. No one really knows what's going to happen. Even though the Bitcoin's halving, we still aren't positive that it will spike to $100,000. It's just statistically speaking, historically speaking, that it's what it's done in the past. It's grown by that percentage, right? So stay tuned because we might have some news pretty soon here going into February and March, and then the Bitcoin's in April. So we could see some news with the volatility in Bitcoin price and all the other altcoins associated with crypto. And the last thing for today are the interest rates for mortgages. So the 30-year fixed rate mortgage is currently 6.375%. That's as of February 1st, which was a 0.25% decrease from the day before. And the 15-year fixed mortgage rates have hit 5.25%. So as a home buyer in May, I'm planning on buying a house. I really hope these mortgage rates keep dropping. But even if they don't, it's not the end of the world. You can always refinance once the rates do drop. So I'm a believer in not waiting for a market crash to happen in order to buy a house. And that seems foolish in my opinion because we never know when a market crash is going to occur, even if analysts suspect it. And I think you should buy a house. If you're looking to buy one, not wait for the perfect time, because there never really is a perfect time to do that. That's a personal opinion, though. And that's partly why government shoots for 2% inflation, is because they want us to not stall when it comes to consumer spending. If we know that year over year that dollar is worth a little less, we're not going to wait to spend it because we know that it's going to be worth a little less next year. So it creates a constant need to spend instead of wait to spend, which is why we have inflation. If there was a deflation, that's even more dangerous than inflation because then things become cheaper, and that's when it throws off that whole 2% growth of inflation and that system type, that habit of just spending when you have it. So it's actually better for us not to have a crazy rate of deflation. That would be pretty bad for the economy. And anyways, that is all for today. I hope you learned something new and you're just a little more well-rounded in the market. You know what's going on for now. And just a quick little disclaimer, like always, this podcast is for informational purposes only. It does not constitute financial, investment, or legal advice. The content provided is based on the host's, which is me, personal opinions and experiences. Listeners are advised to conduct their own research, and they could also seek the advice of qualified professionals before making any investment decisions. The host and guests do not guarantee the accuracy or completeness of the information shared, and they are not responsible for any actions taken based on the content of this podcast. And we're not responsible either for any losses or damages that may occur as a result of investments made after listening to this podcast. Once again, thanks for tuning in, and we'll see you next week, next Monday, for another day of Pulse on the Market. Thanks, guys.